I wanted to do a video to show you a little bit about the complexities of getting a jumbo mortgage. Now, a jumbo mortgage is an amount that's over the conforming loan limit. And I've got this map pulled up. It's interesting to see the map of the country. There's not that many areas in the whole country that have what's considered a high balance loan limit. There's a conforming loan that goes up to, if you can read the small print down here, $647,200. So most of the counties in the country get a conforming loan, up to $647,200. If you can read the fine print, there are even others that go over 647 up to 700,000, and then there's a few that go over 700,000 up to 970,000 and change, 970,800 to be exact. Let's take Washington, D.C., for example. High cost area. If you borrow 647,200 or under, it's considered a conforming loan. Rates are a little lower, guidelines are a little different, probably a little easier. If you borrow over the 647,200 up to $970,799, it's a conforming high balance loan. Rates are a little higher. Guidelines might be a little bit more complicated. And then if you borrow over $970,800, it's a jumbo loan. Rates can be different, guidelines much more strict. So that's what I want to talk about today. Jumbo loan. Let's say you're in Washington, D.C., you want to buy a $1.5 million home, put 20% down and borrow $1.2 million. That's a jumbo loan. You need to make sure your lender is incredibly thorough and educated and jumbo loan articulate, because there's a lot of guidelines, pages and pages and pages. And unfortunately, some lenders will just kind of do a cursory, oh, your credit score is good, your debt ratios are good, looks good to me. And maybe even issue you a pre-approval letter based on that. But it should take a lot longer and a lot more paperwork and a full underwriting to get a pre-approval letter for any loan, especially a jumbo loan. And I thought, how do I want to convey this? So I thought, I know, I'll show everybody there's something called all regs. You're not going to get access to it as a consumer. It's an industry tool. We lenders sign up for it and pay a fee for it. But it tracks guidelines for different lenders. Now, when I get somebody that calls me about a jumbo loan, first thing I do is I go to all regs. Here it is. I go and I look at, there's a lot of different lenders that we work with, AmeriHome, Bayview, Lakeview, Chase. I happen to pick Chase Bank. Then I go down and pick their non-agency, which is another word for jumbo, amortizing fixed rate guidelines. Then you go over to this other screen here, and here's all the guidelines. Now these are topics and subtopics. I mean, you're already overwhelmed, right? Just looking at that. There's requirements for appraisals, reserves requirements, if you're relocating, obviously qualifying ratios and debt ratios, just a whole host of things. And then when you click on a topic like reserves, then there's all kinds of other data to read about. Some states might have different reserves requirements, loan to values. If you've got somebody that's going 20% down or more, the reserve requirements are that they have 6 months of the monthly payment. That's including taxes and insurance. So your mortgage payment and the taxes and insurance. You're supposed to have 6 months of the monthly payment in cash reserve on top of your down payment and your closing costs. So let's say your monthly payment's $5,000 a month. You've got to have another $30,000 in reserves to get loan approval. But then wait, what does this mean? If any portion of the reserves are from a borrower's retirement account, well, now the reserve requirement gets upped from 6 months to 12 months. So now I need 36 months of reserves if any of it's coming from the retirement account. Now, I happen to know that Chase Bank will allow all the reserves to come from a retirement account. So, and this isn't the case for all lenders. Some lenders want your reserves to be cash. Some want a mix of cash and retirement accounts. Chase, I know, will allow all of it, all 12 months, to come from your retirement account. But when you go back to the table of contents, it's just overwhelming the amount of data to intake and process, and it changes quite a bit. So I really get frustrated when someone says, I already talked to a lender. We had a 5-minute phone call. I'm pre-approved. Well, that's really not going to be the case for any loan, but especially a jumbo loan. I don't want to bore you on this video because that's not the intent of the video, to go over each and every guideline. But I can tell you, every time I get a jumbo loan client, I go through and I decide what lender might I be working with. I check all their guidelines. It's an hour of reading. Nobody likes to do an hour of the reading in the middle of their day. It's just not on the agenda, right? But as I know, as a loan officer, I better do it, because what happens a lot of times is people will overpromise and say, don't worry, you're okay, loan approved. And then all of a sudden, halfway through the transaction, there's a guideline that they didn't know about. Well, it's because they were too lazy to do the homework and the research and the reading, or take you through the full pre-approval process, meaning having an underwriter underwrite the loan, because it's also the underwriter's job. That's their job. That's their one job, is to know these guidelines and apply them to each client. But on the front end of a transaction, when you're just talking to a loan officer, you really want to make sure that they've done the homework and researched, are there any, again, I won't read through all of this with you, but are there any residual income requirements? What are the reserves requirements? Debt ratios, minimum credit score. If you've got any other properties, rental properties, second home. If you're moving out of what used to be your primary residence and buying another one, all the reserves requirements change and go up. So now you need even more cash for what they call retained property. So if you've got a second home and an investment property, and you've got a primary residence that maybe you plan to sell after you buy the new home, you better have reserves for all of it. 4 homes: your new primary residence, your primary residence that you're moving out of, even if you plan to sell it, you're going to need reserves for it, your second home, and your investment property. I could go on and on about the guidelines and the complexity and the minutia in getting a jumbo loan. Very complicated. You start getting into condominiums or multifamily property, duplex, triplex, fourplex. You can't get a residential loan on 5 units and up. So I only mention duplex, triplex, and fourplex. I could go on and on and on. It is incredibly important that you ask your lender a lot of questions, or make sure they're instilling in you the confidence that they have asked you all the questions they need to ask you, and that your pre-approval is a real pre-approval, and that you're really moving forward on a sound basis. I hope that helped. Thanks very much.